Back in the day, trade was simple. People exchanged goods directly, for example, eggs for salt, and this was known as the barter system. But barter had a big problem. Both people had to want what the other had. So to make things more efficient, societies moved to commodity money like gold and silver. Gold became especially important because it was scarce, valuable, and widely trusted. But eventually governments introduced paper money, which was backed by gold, meaning the paper represented gold that was stored somewhere, and that gave paper money its value. This was known as the gold standard. After World War II, the global financial system was reorganized under the Bretton Woods Agreement. The US dollar became the world's main currency, and it was still backed by gold. Other countries could exchange dollars for gold at a fixed rate. But in 1971, everything changed. The United States, under President Richard Nixon, ended the era of gold standard. This meant the dollar was no longer backed by gold. It became what is known as fiat money, which simply had value because the government said it does. And for those curious, the word fiat in Latin means it shall be, hence the term fiat money. But this created a problem. Without the backing of gold, why would other countries trust and use the dollar? That's where the petrodollar comes in. To maintain global demand for its currency, in the 1970s, the US made a critical deal with Saudi Arabia, the world's largest oil exporter at the time. The agreement was simple. Saudi Arabia and later other OPEC countries would sell oil only in US dollars. In return, the US would provide military protection. This meant that any country wanting to buy oil, like China, Japan, or Germany, needed US dollars first. Suddenly, global demand for the dollar skyrocketed as every country needed US dollars if they wanted oil. And this became the petrodollar system. But the story doesn't stop there. Countries like Saudi Arabia and other oil exporters earn massive amounts of US dollars from oil sales. And instead of just holding that cash, they reinvest it, primarily by buying US Treasury bonds. This process is called petrodollar recycling, and here's why it matters. These investments back into the American economy help fund government spending and keeps their interest rates lower than they otherwise would be. In simple terms, oil money flows back into the US financial system, reinforcing its economic power. And unless you've been living under a rock, you probably know what's going on around the world. And because of the current situation in Middle East, the petrodollar system could be under massive threat. If US fails to uphold their side of the deal, Saudi and other Gulf states may begin to explore alternative options, like trading oil in other currencies, with China being the obvious frontrunner. If that happens, the global balance of power could begin to shift. Demand for US dollars, and by extension US Treasury bonds, could begin to fall, leading to higher borrowing costs for the US government, weakening of the dollar, and potentially a fundamental reshaping of the global financial system as we know it today.